Armenia's central bank has lowered its benchmark interest rate for the first time in more than 2 years as inflation in the country continues to ease. In a short statement this week, the bank said it had cut interest rates by 25 basis points to 10.5%. Armenia's annual inflation fell to just 1.3% last month, down sharply from 8.6% last year and well below the central bank's 4% target for this year. Still, central bank head Martin Galstyan told reporters this week that Armenia's monetary authorities will be restrained with further interest rate cuts because we do not believe that the fight against inflation is over. The central bank hiked interest rates repeatedly last year amid rising inflation. Monetary authorities often raise rates when they believe the economy has become overheated and prices are growing too quickly. Armenia's central bank this week raised the country's projected economic growth for this year to 6.9%, up by more than 1% from its previous forecast. This is mainly due to faster than expected growth in the services and construction sectors, Galstyan told reporters. That is significantly higher than estimates made by leading international financial institutions. For instance, the International Monetary Fund is forecasting Armenia's economy to expand by 5.5% this year, while the World Bank is projecting 4.4% growth. Last year, Armenia's gross domestic product grew by 12.6%, the highest expansion rate of any country in the South Caucasus or Central Asia, largely on the back of massive inflows of capital and labor from Russia and soaring trade between the two countries. It is understood that a substantial part of last year's growth can be attributed to Armenia importing foreign-made products and then re-exporting them to Russia, the world's most sanctioned country. Earlier this month, the State Department's sanctions coordinator named Armenia as one of 5 countries helping Russia evade sanctions. The other countries were Georgia, Kazakhstan, Turkey, and the United Arab Emirates. In related news, Galstyan this week declined to deny the accuracy of reports in the Russian press that some Armenian banks have started to block Russian companies from making payments for electronics imports. The central bank directs banks to work in line with international best practices, he told reporters, adding, "Banks manage their own risks. Actions aimed at managing their risks may lead them to break off relations with certain counterparties." Citing unnamed sources, the Russian business paper Kommersant reported this month that a number of banks in Armenia, Hong Kong, and Kazakhstan have started to block Russian firms from making payments for servers, microchips, telecoms equipment, and other electronics imports. Since Russia's full-scale invasion of Ukraine last year, the United States has sanctioned 2 Armenian electronics dealers for doing business in Russia. Still, Galstyan has sought to tamp down fears more Armenian firms could fall afoul of US export controls. Those cases are extremely small and extremely isolated, Galstyan said this week, referring to the 2 blacklisted electronics dealers. At the moment, there are no systemic problems that are or have been of concern for the central bank. And as always, please follow CivilNet for the latest news and independent journalism from our reporters on the ground in Armenia, Nagorno-Karabakh, and the region.